Welcome back to another session. This video I'm preparing to explain in details how you go around the capital gain tax. Those who have been in this business for real estate, they already know what capital gain tax is. Perhaps those who are new may find it as a tax that is new to them. But basically, capital gain tax has been there for transfer of property. Property in this case include real estate and financial assets. Financial assets, these are shares. Real estate, you have land and buildings. Now, the only thing that changed is the rate at which we compute the capital gain tax. Effective January 2023, the rate changed from 5% to 15%. Now, how you compute the capital gain tax? You do it, you prepare your sort of income statement, then you transfer this information into iTax. Now, when you come to income statement, there are expenses that you incur in a transfer of this property. Expenses like legal fees, you might engage a lawyer to transfer this property, and other incidental costs that arise in the course of a transfer of your property. That is why I'm saying at the time you want to declare your income, you need to look at what is your net gain in the transfer of property. There are three incidences. One, where you inherit a land or you inherit a building and you want to transfer or to sell this property. If you are able to trace the initial cost, maybe you inherited this from your parents and your parents are not there. If you are able to trace the initial cost, then that one will offset your selling gains or selling price of that land, so that you can now get the net gain. That is the first case. If you're not able to find out how much was the cost of acquiring this land that you have inherited, then whatever you sell, the amount you sell becomes your net gain. It therefore implies that the selling price will be the net gain. The second scenario is where you buy a land to sell it. You buy a land at 10 million, you sell it at 20 million. Your net gain in this case will be 10 million. Unless there are incidental costs, which will reduce your 10 million, but you are not going to compute the capital tax on 20 million because you bought this land and you are selling it. Now, the other scenario is the sale of shares. Whether it is caused by initial public offer or you bought it from a third party, the sales have the nominal value or the buying cost, and there is a selling price. So, in all these three instances, you require to know what are your gains, because these are the gains that you'll pick and populate your iTax account so that you are able to pay capital gain tax. Now, information around the amount to charge and the interest, the expenses and the rest related to this are found in the Income Tax Act. And I want to take you there, although I'll just paraphrase and point out some of the key terms. The key thing I will do at the end of this video is to show you how to generate the payment slip once you want to pay the capital gain tax. Remember, as I said, anytime you want to sell your asset, forget about the stamp duty. You will pay the stamp duty. If you don't pay the capital gain tax, then you will be traced from the stamp duty, because when you want to transfer a property, you will pay the stamp duty. Then you transfer a property, then you fail to pay the capital gain tax. So you'll be, that is a catch. that is a trap. Yeah? If you don't pay that, they will be traced from that. Now, the second scenario is when you want to transfer or want to sell your company assets, and you have not declared these assets in your balance sheet. That is also a catch, because where are these assets that you are selling which are not in the financial statements of your company? So briefly, let me just take you through on how or where to find information about the capital gain tax. They are found on the 8th schedule of the Income Tax Act. You come into your browser, you search Kenya law. In fact, you search Kenya law, and then you go to this home page, and then you'll find the laws of Kenya, and then you look for Income Tax Act. Income Tax Act. You'll follow this. I think should be somewhere in page 4. Income Tax Act. Good. Income Tax Act. Here it is. Yeah. Now, here you can decide to download it, or I can access it from the browser. I will look for 8th schedule. I will go to 8th schedule. This for the schedule, I will go to 8th schedule. 8th schedule is here. Now, in the 8th schedule, you'll find information about what are adjusted costs. Some of these key terms, you need to have them. Adjusted cost has the meaning assigned therefore to paragraph 8 of this section. These include, you see, look at this. You are selling your land at 20 million, but you bought this land at 10 million. 10 million become your adjusted cost. You are buying shares, you bought shares each 5 shillings, and you are selling it at 10 shillings. So you are going to adjust the 5 shillings, which was the buying price, so that you now get your net gain. Now you'll find terminologies explaining about what land is, building and land, and anything that attached to permanent, attached to a land or permanently fastened to anything attached to land. So in this 8th schedule, you'll find a lot related to sale of property. Yeah, you'll be able to know how to compute the taxation of gains. I told you that what you populate in iTax is the net gain you find. You'll be able to see income not chargeable. Yeah, income not chargeable. When, at what point do you not pay income tax? Computation of gains. The gains which accrue to a person on the transfer of any property is the amount of which the transfer value of the property exceed the adjusted cost of the property. That is a key point to note, that you can only pay capital gain if the transfer value is more than the adjusted cost. If you bought this land at 10 million and you're selling it at 8 million, then capital gain tax will not be computed. Now, the other details you can read, you can also read some of these. What a transfer means, you are telling that where property is sold, exchanged, conveyed, or otherwise disposed of in any manner, any manner whatever, including by way of gift, whether or not for consideration. So in this case, when you're talking about the transfer, does not necessarily mean that you have to buy. You can be given as a gift. Sometimes you can even forfeit. When you forfeit shares, you're forfeiting, you say, oh, you guys, I don't want this share anymore. That particular time you are forfeiting your shares, you will pay capital gain tax. Yeah? You're told on the occasions of a loss, distractions, or extinction of a property, whether or not a sum by way of compensation or otherwise, or under any of the policy of insurance, is received in respect of the loss, distraction, or extinction of the property, unless the sum is utilized to restate the property in essentially the same form and the same place within 1 year of the loss. What this statement says, that if your property is damaged, like what has been happening in Nairobi, we had too much demonstrations, burning house, supermarkets, buildings. If these buildings were insured and you get compensation, if you are reinstating the building the way it was, then you don't pay capital gain tax. If this compensation, you say now Nairobi is too dangerous for me, I cannot reinvest, I cannot invest there again. So you decide to move away from Nairobi to somewhere else. Now, at that particular point, the compensation you receive from insurance company, you pay capital gain tax. On the abandonment, surrender, cancellation, or forfeiture, or the expiration of subsidiary or rights to property, including the surrender of shares, debenture, on the dissolution of a company. So this is what this statement means. That time you say you want to do away, you don't want to leave that company anymore. You forfeit it. Don't just forfeit and leave the company. You forfeit in writing that I forfeited this year. By that particular time you're forfeiting, you pay capital gain tax. Now, when a company is being dissolved, there are compensation that the shareholders and the debentures holders will get. That particular time you're being paid this compensation, you pay capital gain tax. There is no transfer of property for the purpose of this schedule. Now, where do we say that at this particular time you don't have property being transferred? One, in the case of the transfer of property for the purpose only of securing a debt or a loan. You are transferring this property not to transfer the ownership, but to get a loan. Or in this particular point, you don't pay capital gains tax. In the case of issuance of a company of its own shares or debentures, in case of issuance, if the company has its own share and then it is given out to, then in this case, the company will not pay capital gain tax. By the in the person represented for deceased person by operation of law of the property of that deceased person. So basically, there are others areas where we say that property, or property in this case, it does not constitute a transfer. Then you also come to learn about the transfer value. You are told, subject to this schedule, the transfer value of a property shall be computed by the references to such of the following amount as are appropriate, having regard to the manner of the transfer. Namely, now this is when now you say this is the amount I'm transferring. The amount or the value of a consideration for the transfer of the property. The transfer value simply in a market terms is the selling price. Or the amount you receive by disposing this. That is the transfer value. Some receive in return of the abandonment, forfeiture, or surrender of the property. Some received as consideration for the use of exploitation of the property, and many other terms. You can read this in details in the 8th schedule of the income tax. Now, I mentioned about adjusted costs. Subject to this schedule, the adjusted cost of any property is the amount of or any value of the consideration for acquisition or construction of the property. Any expense you incurred to acquire the property that you are selling is what now we are calling adjusted cost. The amount of expenditure wholly and exclusively incurred on the property at any time after its acquisition. You acquire property, then you incur the cost to renovate that property, to maintain that property, then that will be adjusted cost. The amount of expenditure wholly and exclusively incurred at any time after the acquisition of the property by the transferor establishing, preserving, and defending the title to and rights over the property. If you incurred additional costs to show that you own this land, yeah, then that becomes adjusted cost. And the incidental cost to the transfer of acquiring the property. So basically, you can read in details on how to adjust your transfer value by utilizing the adjusted cost, and this will end up paying less in terms of capital gain tax. Now, I'm not going to read everything here. I'm only telling you that if you want to learn more about the computation and the terminologies used in capital gain tax, you can read this 8th schedule of the income tax in details. So I will move from here and take you to real generation of the income or the capital gain tax payment slip. Now, before I log into items, I have mentioned that in a transfer of a property, there is a transfer value, there is adjusted cost, and these two will help you in computing how much you will pay as capital gain tax. The second thing I've mentioned is the tax rates changed from 5% before 2023 to 15% after January 2023. So the computation of capital gain tax is at the rate of 15%. So let me show you how to maneuver in iTax and populate your data to pay capital gain tax. I'm going to share my screen shortly, and I show you how to go around iTax. So using your browser, you will look at, or you search for iTax, and then you log in. Logging in here, when you're transferring a property, you can transfer this property as an individual or as a company. So there is no specific conditions that you have to transfer this property as a company. You can still transfer this property as an individual. Log in using your individual details. You log in using your individual details. Log in using your individual details. Using your individual details, that give me 57. If you find this math is hard for you, just press this and it will give you a simpler math. For me, maths is my weakness. I know it even when I'm asleep. So I cannot be making mistakes. Now, sorry, it's not even my weakness, it's my strength. I've mistaken that statement. Now, when you log into iTax. You come here under payment registration, and then from here you'll move next. Then you'll have this area. You'll come that this is income tax. Income tax. Go to capital gain tax, and then you will select what are you selling. I will demonstrate selling two items. So of course, there are several of them there. In this case, I'm only going to talk of land and buildings and shares because that is the most common. Those who are registered at Nairobi International Financial, this firm enjoy certain benefits when they are registered to NIFCA. But in this case, the majority of transactions are between land and shares. So I will start by demonstrating on land. You'll come here. Here there is payment registration, payment amendment, interest payment registration, penalty payment registration. Now, what happens here? Each and every item here is very important. When you make payment initially, you are going to start with payment registration. If you make mistakes in that payment, perhaps you discover information that you did not have, or you inserted wrong figures, you come and do amendment. If you have not met the deadlines, the deadlines of capital gain tax, you will have interest. When you want to pay interest, you come here and say, I'm making interest payment registration, or you can also be making penalty. You don't specifically log in here to declare that interest as a result of capital gain tax or penalty as a result of capital gain tax. Remember, anytime you make payment, they are taken to your ledger, but in a different representation. So it's very important when you want to pay interest or penalty regarding capital gain tax, you move around this area and generate your payment registration. Otherwise, I want to show you how to pay capital gain tax when you have sold your property. And this case, I'm talking about land and building. Those who are in real estate business, you can watch this video, and if you find it hard for you, I'm very flexible. I'm one of the person you'll find me, and I will help you in this. Perhaps I can just give you my number if you so wish, 0723 769 582. Yeah, reach out, and then I will help you to pay your capital gains tax. Don't rely more on these guys through cyber, because the penalty and interest caused by any mistake will be huge than the few coins that you are going to pay for my consultation fee. Once again, my number is 0723 769 582. So you come here to payment registration. I'm told I've payment registration. On payment registration, you'll come and indicate the land rates. This one are in the title deed. Land rates number. Let me say GH 89000. You'll come and indicate the land year of purchase. When did you buy this land? Let me say I bought this land in 2023. And date of the transfer. When am I selling this land? 28/05/2025. Then you come and list down transferee details. Yeah. So whom are you transferring this land to? Maybe A0065957113X. And then once you press this, you'll come and say, I want to press and. You want to press and. The details of the person you're selling the land will come here. Then you come here and fill the details of the owner. Here we have filled the details of the person we are selling the land to. The details of the owner, you come and populate here. 0065. I'm just filling this data, not just as a demonstration. Then the ratio. You see, when you are selling land, in the title deed, there is basically the ratio at which this person owns. Or the owner of this land, he has specific. If they are more than, if this land is owned by 5 people, you will come and populate their data here. Maybe this person, let me say these people are 4. This one owns 25%. And then owner's loss brought forward. In case there are losses that incurred previously, you come and populate here. Now you'll add this person. Then I will choose another person and I bring here and do the same, but here the ratio will be 25. If it is just one person who owns this land and is selling the land, therefore the ratio here will be 100% and you move to the next stage. Here you come and indicate transfer value, proceed value of consideration, cost of the property, sales, transfer value here. Maybe I'm selling this land at 20 million. Now, deduct incidental cost. Incidental cost in this case, let me say I paid a lawyer 200,000. Yeah. Here, this one you say legal fees. Legal fees. And this is a lawyer who took 200,000 in this transfer. Then you're going to add. You add. Anywhere you find this icon to add, you add so that you see you are selling the land at 2 million and you deduct the 200,000 which you paid the lawyer and the final value of this land. Now here you come and fill how much did you buy the land. Cost of enhancement, if any, cost of preservation of the title, if any, cost of acquisition. Maybe cost of the enhancement, this is renovation of the building. I spent 20,000. Cost of preservation of the title, maybe this one you say 30,000. Cost of acquisition, how much did you buy this land? You come and say, maybe I'm selling 2 million, and maybe I bought this land at 500,000. And then allowance so far granted under the section fees. In this case, you don't have capital allowance, but if you are add, because this one are not investment, you can leave it that way. Incidental costs. I did not put anything. Allowance for so far granted under section fees. So in this case, let me put something. I should put something here. Not here. That here should be. This should be 10,000. Now, incidental cost of acquisition. When you are buying this land, what did you pay? Maybe you also paid legal fees. When you paid these legal fees, they should add value to your land. Or you painted the building. So incidental costs will come here and you say add. Now, when you come to the summary here, it is giving you the amount now you are going to pay. Remember, this person owned just 25%. Yeah. So there is capital gain loss, capital loss brought forward. I've already indicated this one. Capital loss carried forward. There is nothing difference being the net gain. Now this is the net gain, and then you compute according to the tax computation. This person should declare 290 because he already had. I already indicated that he had 25%. Otherwise, if you change the ownership here. It was I had already added, so it did not be. So yeah, you see here, I indicated this one on 25%. If there were 4 of them, you cannot submit this one until the ownership ratio here is 100%. So in this case, mine will be 4, so I will have 4 people in this summary statement, so that now I can be able to submit and I will get my you'll get my payment registration slip. That's what you're going to use. So in this case, if this person was paying capital gain tax, it is at 15% and is paying that 9,900. Now, when you want to, let me repeat the same process, but in this case, I'm going to pay shares. I'm going to transfer the same, but I'm told my session has expired. Let me just log in. I'm going to repeat the same process, but in this case, we are going to pay capital gain tax on, this is 107. You're going to pay capital gain tax on transfer of shares. You come here, payment registration, then you move to, it will direct you to this page. You say this is income tax, and this is capital gain tax. And then in this case, I say I'm selling shares. Of course, I had to explain what other what these parts do in this iTax account. So I will move direct to payment registration, and then date of transfer here. I will put this is 25/06. Not this, yeah, 06/2025. And then if there is any explanation I need to do, I will come and explain it here. Description. You see, this one is different from the transfer of land. You can notice the difference. And then here, number of shares, maybe I'm transferring 10,000 shares. And then the price per share is 100. So it will give me the amount. The total value of these shares is incidental costs, how much we incurred to transfer these shares. Description, here we can talk of legal fees, although each and every individual will have a different, and then the value you incurred, here, let's say you spend 20,000, you will add this to your legal fees, and then it will populate down here. It will populate down here. If you have any other, you see this, you can add as many incidental costs as long as they were used to transfer your shares. You can still add other costs. Adjacent cost, this is the initial cost of buying those shares. You come here and fill, you bought, our shares were 10,000, but now you did not buy at 100, you bought them at maybe 40 through the initial public offer. So if there are costs of acquisition of these shares, if there's any cost, maybe you took a flight, 20,000. Now, incidental costs, these are, now in this case, incidental costs in this case. Remember, we have already declared our adjusted cost. Now, incidental cost is cost you incurred during the purchase of these shares. What did you do there? Maybe there was such fees, which amount, and then a value you incurred here, maybe 23,000. Then you're going to add this, and it's going to compute. You can add as many as you have. I said this, and then it will take you to the summary. Summary here show you how much you're going to pay. This one, it shows you that the capital gain tax is 850, and then capital loss forward, if you have any, you can bring them here. If you don't have any, you just leave. You see, the moment I'm putting something here, the amount of tax reduces. So basically, that is it. You come here and say you want to pay through other processes. You submit, and is it. So, in a nutshell, when you are in a real estate business, you need to have your accountant who should be doing this stuff for you, because not all the time you'll have to update yourself with the documentation and the relevant taxes that are, you see taxes in Kenya keep on changing. Today you are at 15%. You go and engage a client and his tax have reduced or increased. So it's good you keep your tax consultant, and I will be glad if you can offer me that opportunity. And as I said before, my number is 0723-769-582. I will be glad to offer you a a good professional service on this area. Otherwise, that is it. That's how we move. We go around filing capital gain tax and documenting our supporting evidence, because in the future, in case there are issues, here I've not even shown you how to retrieve this. The one you submit this statement, there will be records that are kept by KRA. Those one now I can keep them for myself in future. In case you engage me on that, I will show you how to retrieve the information that you have submitted here, because they can come to work against or in your favor in the future. Specifically, if you are in a company setup and you are saying, I'm disposing my company assets, and there are no assets in your balance sheet, it can come to catch you as you move on. Otherwise, it's very important. Don't mess up with this, because a simple mistake here can be very expensive. So we stop there in this video. I look forward to meet you in professional engagement. Goodbye.